Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, it's nice to be back after a couple-week break at year-end. There's been a lot of things that have happened over the last couple of weeks. Most of the things that unfolded over the last couple of weeks were within the expectations that I set up for you, but there's a lot that we're going to have to unpack this week. So my plan is to spend a lot of time doing this on Wednesday's live stream, which is at 1:30 New York time. That will give me ample amount of time to talk about the plethora of things that need to be discussed as we come into this new year. We're going to see a lot of things happening that we didn't think would ever happen. You thought last year was exciting. I think we have even more exciting things to see this year. Not necessarily bad or good, but different, and there's going to be a lot to adjust to as we go forward. Just taking a look back on last year, of course, we finished at an all-time high on Thursday, the final day of trading. How appropriate is that with as bad a year as it was economically to see the markets go out at the high? Of course, we know the economy is not very good at all. We know that all of the money that was pumped into the markets, the goal was to make the markets look good so everybody would feel like things were okay. We know they're not okay. There's still a massive amount of disruption and dislocation in the economy. We have certain segments of the country, once again, that are fully shut down, and this craziness continues. Meanwhile, markets continue to act well. Overnight, we're seeing futures doing pretty well. The big story out there, of course, is Bitcoin pushing up above 33,000, and we're seeing gold start to come alive. And I'll be talking about that later in this video. But as we look to this week, of course, we're starting a week off with a big bang. We've got unemployment coming out. We do have some PMIs as well as some manufacturing numbers coming out. So there's a fair amount of economic data that's coming out. I'm still looking at things to generally be okay, but the Thursday continuing claims, I'm looking to drop under 5 million this week, and I'll go through that in more detail as the week. There's really not a lot to discuss at the moment, and it'll be more relevant as we get further into the week. The futures came in slightly lower. We're already seeing the bid come back in, so everything's fine. We're looking at UK as rolling out the vaccines. There's all kinds of things going on the planet that folks want to believe in, that things are going to be okay again, but for the moment, the markets continue to believe that and at least posture themselves along those lines. It's actually amazing, as I mentioned earlier, that the S&P and all the markets went out at an all-time high. The S&P was up 16.3% on the year, NASDAQ up 43.6%, and the Russell up 18.6%. So those are amazing numbers considering how things looked in February and March. So let's go ahead and dig into the charts tonight, start to get some context of how the markets are going to start to unfold as 2021 starts to trade. As usual, we'll start off by reviewing the WaveTech Database. Looking at the intermediate numbers, we're seeing the current bullish percent at 78%. There was a slight positive rotation on the 3-2 model. On the 1-2 model was negative. So there's still a rotation going on, but we have a very bullish number at 78%. The current duration on the models, currently about 30% of the forward-looking duration has been experienced, so there's still 70%. The average is 202 trading days, so there's still quite a bit, 140 to 160 plus days looking forward on the intermediate trends. We're likely to see some backfilling over the next several weeks, but we'll most likely stay well above the 60 2% bullish level. As we go to the daily review, we're seeing basically a neutral to negative rotation, but we're at 71.75. We did drop into the mid 60% bullish level. We're seeing some increase back again. One of the things that has happened, and I talked about this several weeks ago, is that the database will refresh, and now the current duration on average is 11 days, and typically these trades will stay on for about 40 sessions. So there's still a substantial amount looking forward. There's at least another 20 plus days as far as the short-term trends go. So we're still seeing a relative bullish trend underlying in the markets. So there's not a lot of negative rotation going on anywhere from the database. So this means that the trends are continuing to look forward and to look higher as we come into the beginning of this year. As I begin with the S&P futures, we're seeing it continue to move higher. The PPMs are basically neutral, but there's still an uptrend. The key level to watch is the 10 paired moving average. It's currently at 37.11. Last trade 37.49. So we're seeing a continuation of this uptrend, and the support is right at the STX number at 37.17. The 10 paired moving average 37.11. So that's going to be your primary demand line. We are seeing the PPM starting to look a little heavy here, and so it's going to be critical that we see the markets move higher. As I'll discuss in a minute, the cash market actually got an RTX sell signal, which suggests at least a 1 to 2 day sideways to down, and I'll discuss that in a minute when I cover the cash. But the futures are looking a little heavy. We are still seeing the PPMs fading here, especially on PPM 3, where it's cutting through its first derivative. PPM 1 and 2 are both through their first and second derivatives. That just confirms that 10 period moving average will be the key pivot in the patterns. The most likely scenario for the range today is an R1 S2 number, which would be a 37.56 on the upside and a 37.33.25 on the downside. As we go to the S&P cash, you'll see here as we look at Thursday's action, we closed at 37.56. RTX was 37.53.61. So we closed above that number, which suggests that we would come back toward the S1, S2 number, which is 37.26 to 37.21. So we'll be watching this number over the next couple of days. As we look at the PPMs, they do not indicate the same thing as the future because they haven't updated, but we will see all the PPMs turn down as long as the market is below a +2 in the morning on the opening. So expect to see this momentum dissipate, where we should see at least 2 days of weakness, possibility of more, but the next 2 days will be critical to the pattern. As we look at the SPX cash numbers for the week, we're looking at R1 at 37.71. We went out at 37.56. S1 is 37.40, S2 37.23. These are the weekly market grid numbers. So expect to see the market try to work back towards this 37.23. Below that number, then the next target zone would be 37.06 to 36.91. But we are seeing overall the PPMs remain quite positive. Like in the cash market, the 10-week moving average is also major support and a demand line. That's on a weekly basis is a bit lower. It's way down at 36.09. So we have the 37.11 on the short-term basis, 36.09 on the intermediate. The next market I'll cover is NASDAQ. We're down 11 handles overnight. We're seeing a narrowing of the range, and this is significant. I've talked a lot about the market grid. When it starts to narrow, this usually indicates there's some downside action likely. Now, the 10-pair moving average, 12,773, will be the number to watch in this pattern. Also represented at that same level is the STX number on a daily basis at 12,085. Notice that the PPMs, this reflects the overnight action, are all negative, and PPM 3 is cutting through its first derivative. PPM 1 and 2, just like in the futures, are both below their first and second derivatives, and momentum is dissipating very quickly on a short-term basis. From a weekly viewpoint, we're still seeing very robust numbers on the trend. In fact, the weekly PPM 1 has turned up to a plus 1.49. PPM 2 is still below its first and second derivative, but it is at a plus 0.71, and PPM 3 a plus 0.125. So this is significant in that the uptrend is likely to continue. The downside will be, as I mentioned on the short-term charts, somewhere around 12,800. The extreme would be at 12,721 for right now, but expect to see a choppy sideways range as we move into the early part of this week. The next market I'll cover is the US dollar. The dollar continues to sink. I talked about this right before break, that I saw this thing trading down into the 89 handle. We're getting into some pretty critical levels, but we're also seeing some sharp acceleration on the downside. Now, this is the weekly chart we're looking at. We're looking at a negative 0.47 on PPM1, negative 0.17, and a negative 0.28. So 2 of the 3 PPMs are actually in downtrend mode, which suggests you're going to have substantial resistance around 91.10. And this is also starting to affect gold, which I'll cover here in just a minute. To locate the potential for a bottom, to locate a potential bottom for the dollar, we're going to need to look at the monthly charts. The 200-month moving average is down at 86.87. We also looking at the market grid, 89.37. We're trading just about to that level right now. That's going to be the first level to watch. If it gets to that level, then we're going to S2 88.77 to 88.16. The extreme for this month is 87.62, but it does look like we're going to continue. All of the PPMs are negative on the monthly basis. We have a minus 0.98, which is a huge downtrend on PPM1, and it doesn't look like it's even trying to turn up. So this is a substantial risk to the dollar actually plummeting going forward. And over the next couple of sessions, I'll start to unpack some of these things that I believe that's going to start to happen in the Treasury and the Fed as we go forward. The final market that I will discuss tonight is gold. We're going to start with the weekly chart, and we're seeing that the PPMs are starting to break out. PPM1 is at a plus 0.21, almost at trend mode. I discussed this right before I left, that I thought we could trade up toward the 50% retracement level, which is the 1928 level. We've actually traded up to the 1929 level tonight. The extreme in this pattern is somewhere around 1968, but I've been talking about this over the past month or so, is that a major bottom is setting up in gold, and I believe we'll start to see a substantial trend unfold and ultimately taking out the all-time highs on this market. This is going to be a bit down the road, but we're definitely setting up a major low in this pattern. This just confirms to me that there's more likelihood of some sort of disruption around the corner here. Not sure what it is, but there appears to be some things going on. It's possibly explains some of the craziness and everybody packing into Bitcoin right now as it's trading at 33,407. But this pattern is setting up on gold is substantial. As we look at the monthly chart, you'll see those levels I talked about, 1928, which is a 50% retracement, 1968, which is a 0.618. But also as we look at the monthly market grid, that's very revealing as well. As we're looking at R1 1928, which matches perfect with the retracement. We've traded that already for this month, which has just started. And R2 is 1965, which also matches to that 0.618 number. I don't think we can be able to get above that this month, but if the Dow does start to get into trouble and decline sharply, we could see it exceed that level. The next point to watch then is 2001, and we'll see how this thing unfolds. As we look at this month, I don't think we'll get anywhere close to the 1862 level, which is S1 on a monthly. Most likely, we'll see a 1965 level. We'll probably see this thing continue to move up, and then at that point, we'll probably set up some choppy sideways pattern, maybe a minor correction set up from those levels. But we're likely to continue up toward that 1965 level over the next couple of weeks. And the way things are trading, that could happen much sooner than that. This will complete the video for tonight. Thank you so much for watching. It's great to be back. We'll talk to you tomorrow night.